Hey, good morning, everybody. Welcome to Pre-Market Prep. Hope you all had a great weekend. I see you on the chat. Dino, Duncan Dave, Paint, Zen Bullish, excuse me, can't talk today. Boris, Shawson, man, if only I knew about the Shopify split on Friday. If only I knew. Truthfully, it was George Gotch who reminded me in the chat that I had said previously Shopify I would buy a Shopify at 600 and I didn't realize it was there. So George Gotch, thanks to you, man. We're going to talk about Shopify today. We will talk about the never-ending saga between Twitter and Elon Musk, the latest twist out overnight. We'll talk about that. We'll talk airlines with JetBlue. We will talk about the AT&T spinoff of Warner Media, which is complete today. We'll help you understand where the stock should be trading. We have a deal in the cyberspace, SailPoint. We can discuss that. We will take questions from our chat. And yes, obviously, today is Monday, which means it is time for Market Structure Mondays with Tim Quast. It'll be at 8:35. So, you know what to do. Go ahead. Smash that like button, please, and thank you. And let's get this show on the road.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, let's start as always with Joel Elconin and his charts. Joel, good morning. How was your weekend and how are we doing this morning?
We're doing okay. Little echo there, but did you hear that big storm this morning?
Oh my gosh, did I? I heard it in the shower. That's how loud it was.
That was a big one. Thought, boom, there goes my power. But no can do. But little power out of the market here. Down 28 handles at 45 at 55.50. We have crude traded in the red here. Boy, oh boy. We're almost back to pre-war levels, down 480 at 93.46. Gold found support last week and a nice little bounce up 20.50 at 1966.10. Silver back in the 25 handle up 63 cents at 25.45. Couple bad days in a row for Bitcoin, kind of going with the market here, down 17.20. Just call it 41K. Ethereum futures are moving in the same direction, a little bit more on a percentage basis. They're down 198 bucks at 3038.50. Triple D, a little bit of a weak close on Friday, kind of tapered off. What did you see? Anything in the after hours interesting?
Hard to remember back to Friday. That's a long time ago, feels like, when you go through a weekend. But all I can remember, it's every single day on this market, is rips are getting sold. They continue to be sold. We had a little bull run there for about 2 weeks where everybody, the FOMO kicked back in. We've caught all those people now as well. I just don't see the reason to just jump in and say this is the bottom. Let's get bullish. It's going to be chop. We're going to have these 50-point S&P rallies here. You're going to think you missed it. I'm going to tell you probably haven't. So, this market just continues to disappoint, really, if you hold long enough anyways from the long side. You get good news on stocks. And just case in point here, you had AFMD, a biotech stock, hits all the data points or at least, it comes out with good data over the weekend. Everybody's excited for the open. It's up 50 cents. It's up 12%. If you take us back to a bull market, the stock is probably doubling on this. But it doesn't matter. They don't run stocks like they used to. Twitter now, which we'll get into that too, has come back down. Hewlett Packard is starting to leak. It's like you get these pops, you get these 10, 15% pops, you take the money and run, because the money eventually just goes back away, it seems like, from the long side. It's a disappointing market, really.
All right, did we want to touch on that?
Yeah, well, on the Twitter thing, we do. And yet, though, everyone seems bearish, which naturally makes me a little bullish here.
I
but-
don't see that at all. So I
Okay.
know, and cite the sentiment. You know, you were saying Bank
Yeah,
of America ran some sentiment thing.
B of A is their bull bear survey. It's a survey, so what people say, what people do, obviously two different things. But the bull bear sentiment survey is at extremely bearish right now.
And you know, and this can be an indicator that, oh yeah, it's going to be contrarian and we're going to jump up. But I just go from like my Twitter feed and I'm still getting, what are you buying? Oh, is this the dip? Oh, what are you buying? What are you buying? What are you buying? I don't get, what are you selling ever? I don't get, you know, the odd person's like, okay, but people are still excited to try to catch the dip, to buy the dip. You got to break those people. I mean, this is the market that is going to eventually break those people. And when you start seeing everybody saying, that's it, I can't take it anymore, I'm throwing in the towel. When you have JP Morgan say China is uninvestable, that's your signal to go long. Because obviously we saw, you know, what happened then. I'm not seeing that raging bearish sentiment that you're talking about, at least not from my Twitter feed. And I don't feel it either. So I'm not feeling like the world is collapsing here. So and you know, the market has held up well. And there's going to be a lot of stocks that do hold up well. So I don't know what that means. All I can say is if you're in the prediction business where you're trying to predict the next move, it's a tough market to be making money in if you're in the prediction business. And a lot of people say, what are you talking about? It's all stock trading is. But there's all kinds of other things too. There's strategies involved. I mean, we've talked about, you know, just selling the rip, you know, using those opportunities. We talk about, you know, playing the chop. You know, stocks, again, move in waves. I mean, if you're playing those waves where, okay, it's coming up, I'm selling, I'm a net seller of stocks. Coming down, I'm a net buyer of stocks. Coming up, I'm a net seller of stocks. I mean, that's working really well in 2022. So certain stocks just continue to leak. Stocks making new all-time lows. I never want to own those. But I mean, go back to Shopify too. I mean, here, you know, and give the news on that, Spencer, and we'll just do some
Before we jump to that, I just wanted to make a comment on like Spencer and like the surveys and stuff.
Yeah.
I think that's kind of like investing like, oh, I'm going to buy the stock of the guy who I think is going to win the Masters. I mean, you know, you don't know. First, it's just a random information that's out there, and we
Yeah.
we,
No,
we
you're
were
right.
asked about that.
Right.
So, and then, you know, contrarian that, you know, get your own opinion, you know, and then, you know, you can have other things shape your own opinion and stuff. But like,
Right.
you know, going with like the surveys and they're bullish and they're bearish and things
There's
like
no edge
that.
there.
Yeah,
There's no edge to
yeah.
listening to some Bank of America survey and then getting bullish or bearish off of
That's
that.
fair.
There's no edge there.
All
I'm
right.
telling you right now. Don't waste your time.
Can we start with Twitter here? This is just a never-ending saga.
Yeah.
So I'm going to bring up the tweet last night from Twitter CEO. This is what he posted with regards to Elon Musk joining the board. I will read you the statement here. Team, Elon Musk has decided not to join our board. Here's what I can share about what happened. The board and I had many discussions about Elon joining the board, and with Elon directly, we were excited to collaborate and clear about the risks. We also believed, and this is what I think is the key, we also believe that having Elon as a fiduciary of the company, where he, like all board members, has to act in the best interest of the company and all our shareholders, was the best path forward. The board offered him a seat. We announced on Tuesday that Elon would be appointed to the board contingent on a background check and formal acceptance. Elon's appointment to the board was to become officially effective on April 9th, but Elon shared that same morning that he will no longer be joining the board. I believe this is for the best, which flies in the face of what he said last week. We have and will always value input from our shareholders, whether they are on our board or not. Elon is our biggest shareholder. We will remain open to his input. That's the gist of it. So, what I suspect happened here, this is just my theory, is Elon saw the terms that Twitter was offering in that for him to be on the board, i.e., you cannot own more than 14.9% of this company. You cannot just be firing missiles on Twitter about what you think we should do. You need to act like a board member should act. And Elon said, thanks, but no thanks.
Yeah, he says, I want to fire missiles on Twitter.
Yeah.
And if you're not going to let me fire missiles on Twitter, I'm not joining the board. I'm going to be your biggest shareholder, and I'm still going to fire missiles on Twitter.
Yep.
And he was already talking last night about what he wanted to do. He was asking different questions and stuff. So he's going to give him all his feedback. He's not joining the board. It makes perfect sense when you think about this. So obviously he's still going to be pitching ideas, and that's a good thing. The bad thing is the error seems to come out of all the stories 3 or 4 days later in this market. They just don't hold up. There's no, you could call the whole market the no follow through market. We have that round of algo buyers that buy on the initial headline, pump it up, it gets up there, and then there's leakage and leakage and more leakage and more leakage. And usually, you see the next round of buying come in a bull market. We have not seen that. It just continues to leak, and a lot of these stocks continue to leak until they give them back a lot of the gains. I'd said if this came back to 45, I'd be interested. You're getting there right now. The market just is not telling me to buy anything, though. Again, I'm sitting with the 43% long-term cash. I wish I was still at 52. I put a little bit more in, which I should have not. I should not have. I guess I'm Yoda. I don't know what to say. Like, I'm just at this point where if you're chasing news, you're losing money. If you're selling the news, the pops, you're making money. So I'm going to go with what's making money. It's hard to be a dip buyer here, and it's a disappointing market, just to say the least.
Yeah, this the pop in Twitter, good call with Spencer and I talked about it last week. I thought it was a good opportunity to get rid of the small shares I didn't sell before. Went out there at 55 a couple days ago because
Did you
that's where the
sell?
other piece was. No, never got it. It got to 55 in the pre-market. And then I'm like, kind of guilty of just not going with what my instinct was and just like, oh, well, Elon Musk is involved with the company. It's got, it's going to go 50, 60, 70, 80. When in reality, these things take a long time. They don't happen overnight. And, you're seeing your reaction now. And I remember you talking about it at 45, tried to make a little wager on it. I think you fill the gap now. I mean, I
You
thought,
could.
you come back down to $40. I think, fundamentally, there's still a lot of things that need to be changed in the company. And it was a nice story. It was a nice pop, right? And I
Yeah.
think anybody who was a short-term trader or swing trader or, intermediate investor. I mean, are you going to get another opportunity like that? Is there going to be another Elon Musk thing? And like the other thing now you're banking on if you're holding it, and I don't really consider myself a bag holder, kind of semi-bag holder, is like, oh, is he going to buy the company now? And I don't think so. I don't know. I have a way of knowing, but I think that's going to be the next round. Okay, well, he couldn't get on the board. Now he's going to buy the company, but I don't see that's a possibility. Big spike down to 42.50, and you got to
What was
bounce
that?
up.
That was when he said he wasn't going to be on the board?
That must have been the 4 a.m.
Yes.
4 a.m. traders, Dennis. That was a big bracket. Went from opened up.
They're
at
wrong
40.
all the time. They're wrong all the time. I mean, there's people that are right, but fading the moves again. I've had this story before, but you look at this and you're just like, wow. Like, so I traded 4 a.m. for better part of a decade, like actively trading it, making good money trading the 4 a.m. opens. And what I was doing at 4 a.m. was almost always fading moves because there's all mass stupidity out there. There's no liquidity, and people pay way too much for good news and sell way too hard on bad news. Another example of selling way too hard on bad news, you're fading that and you're making some money. So I mean, it's tricky. You have some big losers when you're trading at 4 a.m. too. It's not like you can just go and fade everything. You got to be very informed. You got to have your news. You got to know what's going on. And sometimes news at 4 a.m. is very hard to get. But for the most part, if you're chasing big moves at 4 a.m., you're usually losing money.
And I just want to, just for people that are trying to do this, I brought this, I kept on bringing it down. This is 3 minutes worth of price action here, folks. This is three. I mean, I could go down to 2 minutes, but I'd have to resize the chart. So 3 minutes opened up at 46 and change when it
How do we
went
know?
down
Do we know it opened up at 46 and change?
Well, I'm looking at the
You have the
4 a.m.
ticker?
open. I got the bar.
So I can
I mean,
grab the actual trades. The nice thing is, you go grab the time and quotes.
okay.
Here, let me just go grab it. Take me like 2
Well,
seconds.
and
I'm
what
grabbing it
time
right
did
now. I'm looking
I
at
got
4 a.m. right now.
I
Okay, so here we are, 3:59 this morning. You're correct. Opened up at 46, all in the opening bar. So there's probably some retail orders, and you get, like just people getting slammed that are like maybe oblivious to the news, and they have orders out there, and they get picked off. So you basically have everybody picked off in the 46 handle. Any bid that's picked off in the 45 handle. This was all in the opening second. Then it was already down to 44. So it went down from 46 to 44 in the opening second. All the trades happening in the opening second. And then it was 44, then 43.70, 12 seconds later. Then 30 seconds later, we were trading 42.5. So we literally, actually it's 44 seconds. In 44 seconds, we dropped from that 46 to the 42.44. Now, if you were a seller, could you get short in that? I don't know. The algos were all over the first bar. So I don't think if you're selling it, you're probably beating the algos on any of the 46 and the 45 stuff. You probably could get some off at 44. This is just from reading the tape. I'm very good at reading the tape. And then 43, and then it started to bounce out of there, and we slowly climbed back. But the algos just hit everything they can the first opening bar because they know the news, and obviously everybody else knows the news too, and they're waiting for that open. But they're going to get those orders in before everybody else. They're just that good.
Yeah, trying to sell into it is one thing. If you had a short, if you had some options, which shorter dated, obviously we have one less day this week too, Dennis. You got to prepare for that because Friday is Good Friday. There'll be no markets on Friday, so your
True.
option premiums are just we got a question on this on Twitter. They're just going to decay a little bit faster. So look at your theta, and it's just they're gonna squeeze a little bit more out each day, and because with the option expiration.
Early one this week, yeah.
Yeah, because of Good Friday.
Yeah.
But yeah, I mean, Twitter, I don't know. I still may sell it. I don't care. I'll let it. It's better than selling it in the 30s, but we'll have to see on this one. Twitter, how other social media stocks?
Yeah, I'm glad you mentioned that, Joel. It's a great observation from Trinidad, also in the chat. Twitter, this whole Twitter Elon saga is also playing out in real time with DWAC. If you look at DWAC, because this thing has traded in reaction to Elon Musk joining the board, or Elon Musk taking a stake, Elon Musk joining the board. Now Elon Musk not joining the board. DWAC has reacted each and every time.
Yeah, but look at the overall reaction.
Right.
Yeah, in the opposite direction. But look at the overall trend here.
Oh, sure.
The overall trend. I mean,
the deal still hasn't closed. There's a reason the ticker is still DWAC. Is because the deal hasn't closed.
Look at the 4 a.m. reaction here too. Exact opposite. The algo's buying this as much as they could. Probably turns in the same 44 seconds afterwards when they have to buy it up to 54. The stupidity in this market is just absolutely incredible. It's honestly unbelievable. There's so many traders that have absolutely no idea what they're doing, and so many algorithms. There's actually sophisticated traders that have no idea what they're doing. The people who are behind some of these algos are just absolutely. There's some good ones. Don't kid yourself. There's some really good algorithms. One's run by Citadel. I'll tell you, aren't buying DWAC up $54. But there's algorithms that are run by people who just don't know what they're doing, and that's probably all algorithmic driven, just pissing money away.
Let's move on here to Shopify. Shopify doing the number one thing you want to do to get your stock price higher in 2022, do a stock split. They announced this morning a 10-for-1 stock split. If you were watching Fridays at the close,
yep, that's true.
You watched me buy this in real time. I had no idea that this is going to happen. Obviously,
you're long it. Nice.
Yeah, but just my luck, it does seem like the market is beginning to get wise to this trick. Because if it were 3 months ago, Shopify is probably at what, like 630?
It's up 10% on it.
650?
I think if you did this 3 months ago, it's up at 650 or 660.
Yeah.
But this market is the we sell all rallies type of market. And again, look, your algorithms that haven't adjusted for the bear market yet buy this thing up to 640. Now back down to 613. This is very disappointing. I'm sorry. If you're a Shopify shareholder, this is the news you want to get your stock to come up, and it goes up $9 on this right now. I think it's too low. I think that it could go a little bit higher on this, but I'm not saying long term. I'm just saying for the news, I would think you'd get more than 1% on a 10-for-1 stock split. I think this is almost too numb to the headline.
It's tough environment. Look at and also if you would have done this, when the stock was at like 1,600, but obviously they didn't see a need to do it then. Dennis, despite that you're talking about, the percentage that you're talking about may have already happened because you did get a real quick spike up to 641.01. So once again, that wasn't at 4 a.m. because the news came out later. That was in the 7 o'clock bar. 6:45 or 6:45 to 7. That's when you had the move. I think you just got to look at your dailies here. Try what's even Friday's high. Friday's high. Oh, that was up there too. Boom, 6:41. So nice pop. I don't know if you're going to get a chance to sell it back up there again.
I don't know either. You'd think you'd
And
get
I'm
more of
not
a
buying
pop
it.
on this. This is disappointing. But with that being said, it probably has been talked too much on CNBC yet. You get now it's mentioned, and you get the CNBC pop. Maybe they mentioned it already. I'm sure maybe they've mentioned it once. I'm not watching CNBC, but I mean, you got 600. That's the level you got to hold. Is the stock? Somebody asked me on the weekend. Is this stock getting cheap enough where I take a swing at it? And I said, back last year when we were in a little bit more of a bull market, that this ever got down to the 500-600 area, I'd take a swing. I don't know now. Like, what's the PE on Shopify, Spencer?
What's the
Isn't it still like 100 times earnings? Do they make money? They're profitable.
No, yeah, the forward PE. Oh, it's what? Well, okay, trailing PE is 26. Forward
something's
PE.
wrong there.
Forward PE is that 250? That cannot be right.
They don't make a ton of money.
There's no way it's 250.
Oh, it could be right.
250 is absurd.
What are the earnings projections? Do you have the earnings projections in there?
I'm just going to the trailing PE at 26 seems like a more reasonable.
No, it's not. There's no way it's 26 the PE on this. I'd be long this thing was 26.
Right.
This was always trading 150 times earnings.
Yeah.
So there's no way in the world it's 26. If this thing's PE is 26, you buy it. There's
All
not.
Right.
It's not.
It does look like the forward PE is somewhere in the 200 area.
It's not even close to 26. I would say when this thing gets under a 40 PE, you buy it.
Okay. So price to sales is 20. That's very
price to sales.
Extremely high, but that's extremely high for a price to sales ratio, right? A normal price to sales is what, like 4?
On
3?
These growth stocks, sometimes it's 7 or 8 or 10, not 20.
Well, it's 20, and the forward PE is around 200. So it is expensive.
How do you justify in this market paying 200 times earnings for something? I know everybody can look at 1,600 to 600. It's a fantastic company. It's just, don't get fooled by this PE that, they're showing 26 because that might have been a one-time earning event, something like that. Don't get fooled thinking that the PE on Shopify is 26. It is not. Forward PE, Barat says 122. I mean, we're basically still trading 100 times earnings. So you could cut this thing in half, and it would still be trading twice a market multiple. No, 3 times a market multiple. So it's hard to just come in here and say, rah, rah, we're going back to 1,000. If we get into a bull market and FOMO starts raging back and stuff, Shopify will go. But if we don't, or if we just stay, if the market just stays complacent here, Shopify will continue to leak. And that's what people don't understand too, is these growth stocks need the bull train to keep going because otherwise the leakage happens. So even if the market stays sideways, growth continues to leak in that environment because it's that everybody's looking and obviously expectations are just simply too high. So they need for growth stocks to really perform, for that start getting, you need the market to start taking off. And then you'll start to see some love for this, but it's hard to get bullish to stocks that's trading 100 times earnings. And again, I see the 26. I see it on my system too.
But again,
it's probably a one-time event, like a one-off that's throwing that number off. You've got to look at what the earnings, the overall, not looking at what they did just for one quarter or what they did just
right. And so the reason that is right so the trailing PE is looking at the earnings from last year and their second quarter of 2021, the quarter that ended like last summer, was an amazing quarter for them. But
maybe they had a one-time gain too or something in there.
Yeah.
That's what throws these out numbers off.
Right. No, that's what I'm saying. Is if you just look at their EPS quarter by quarter, Q2 of last year sticks out like a sore thumb.
Yeah.
Right. So it's throwing the whole number off.
Just real quick, just going back on this on one technical note, if you are getting down and dirty in these stocks and the pre-market and after hours, just paying attention to like the daily highs and lows. I was kind of shocked that the high was 641.73 and Shopify on Friday right? And sold off, had a weak close, $37 off that. And then that pop, I don't know how much volume traded on that, but it got within 90 cents of that. 5,000 shares have traded. So you would have been out there. But if you're in that situation, let's say you got stuck on this thing on Friday and you wanted to exit it, I mean, your daily low, or your daily high wouldn't quite gotten it, but when it turned there, you would have been thinking, man, I got to smash a bid. But just wanted to point that out for people that are trying to use the after hours and pre-market to exit trades, not necessarily enter trades, but exit trades.
Let's move away from Shopify. 10-for-1 split is, as you said, off its highs, and let's talk about this AT&T thing here. So the spinoff is finally complete. AT&T has spun off its Warner Media, which is basically just Warner Brothers and HBO at this point, a Warner Media division. That division has now merged with the company that was formerly known as Discovery. That stock ticker that was DISCA. So you have the old Discovery plus Warner Media combined into a new company called Discover Warner Media with a new ticker symbol. So we have AT&T and we have new ticker of WBD, and we're good. So for those AT&T shareholders out there, you see AT&T trading down this morning. You're like, what the heck is going on? Well, it's not really trading down. First things first, if you own AT&T, then you're going to get some of this new guy, this new WBD, right? You get 0.24. Actually, I'll read you the exact ratio. The exact ratio. If you owned AT&T, for every share of AT&T that you owned, you are going to receive, or you have received, 0.241917 shares of WBD for every share of AT&T that you had as of Friday's close.
And if you do the math on that, it will give you an adjusted close on AT&T of $18.2202. So $18.22. So AT&T is actually trading up 55 cents here right now. So it's having a pretty good day post adjustment here.
Yeah. Plus with
sell the rip.
Yeah. I got it. I've had it for a long time. Who knows? But I've kept buying a little bit more. But they own HBO, right?
Yes.
Isn't HBO
That's what they just spun off.
Yes, they just.
I'll tell you right now. There's a great. I'm bullish for one reason. Well, have you watched Winning Time yet, Spencer?
It's on the list, man. I can't.
You gotta watch it.
It's on my list. I got so
even if you're not Dennis. Are you a basketball fan at all?
No.
Well, you should.
I like the Pistons back in the bad boy days.
Well, you would love this, man, because it's about the rise and the fall of the Lakers, and it goes all the way back to Magic and everything. Yeah, it is. It's great. So I have shares. I have to figure out what the split shares is. I don't know. I mean, it's still. I know the dividend has been slashed, but it's still a decent dividend. And the AT&T, and I got the WB2. And I don't know, maybe someday, these utilities rallied, right? Verizon rallied. Why can't AT&T rally? So if you want a very look at that. A guess.
What's left in AT&T, Spencer? I want to interrupt you,
It's
Joel.
the actual AT&T business. It's the telecom business.
Did they keep DirecTV in there too?
Well, they're trying to. No, I think they already got rid of that, or they're trying to get rid of that. Right?
They've been trying to get rid of that. I don't think they can. I don't think there's any buyers for that.
It's telecom, and it's a cable provider, right? That's what this is. And by the way, I misspoke. The name of the new company is not Discover Warner Media. It's Warner Media Discovery.
Warner Brothers Discovery.
But there was a really good article in the Journal over the weekend just about how bad AT&T was at running a major Hollywood studio.
Yeah.
So
everything. They're bad at everything that they buy. Maybe this is a good thing.
Well, the reason I suspect AT&T might be higher this morning is because their CEO said they may have to raise their prices. Obviously, who's not raising prices right now? So they may have to raise their prices due to inflation. So
you know who really hurt this stock, and I don't know if he's flipped on it because I don't pay attention, but Kramer really piled on this one. I don't know where he's at.
Yeah, but he's been tied. He's flipped again.
He's flipped?
Yeah, I've been bearish this stock for years. Years
of
bearishness on this, and right. I don't know what to say here. I mean, I look at it and I think, why do you want to own this? I mean, everybody's, been cutting the cord, everybody's going to streaming, and now they're spinning off some of their good stuff. And you want to own the legacy old cable business? Man, there's so many better places for your money. I absolutely hate the stock.
I mean, it's a dividend aristocrat, right? It's got
but the dividend keeps getting cut on you.
Right.
Cutting the dividend. Right. I mean, you're sitting in this thing for how long just for the dividends? You've been not making any money in the bull market, and now you're losing money in the bear market. Just doesn't sound that good to me.
Yes. Agreed.
Not a fan. Won't become
Agreed.
a fan. I don't like buying businesses that are under. You want to talk about businesses getting disrupted and disruptive technology. There's nothing that's getting disrupted more than in the last 5 years than your cable companies. And a lot of them have done different businesses, but now they're spinning off the good stuff. They're going to spin off. So go buy the good stuff then. Well, maybe you want to go buy WBD, but I don't think I want to own any of this.
All you have to know about AT&T is the bull case in 2018 was that they had just acquired Warner Media. Streaming is the future. Now they own HBO Max, and that's the growth driver of the business. And
that's what they're selling.
That was the bull case. Well, here we are 4 years later. They have now sold that so-called growth asset. And so now what's the bull case? Tell us something else, because it ain't that, because you don't own it anymore.
I think in the long run, this thing's going to be a single-digit stock. AT&T, and it's going to be a dividend trap for everyone. Sorry, Joel. Absolutely hate your pick.
I mean,
that's why we have a market, though.
AT&T is one of the stocks that's in like everyone's pension funds, right? It's in like it's in their retirement account.
It's been such a underperformer for so long. I guess you're getting those dividends for a while, but now they're cutting the dividends.
I suppose. Anyway, as we said, adjusted close 1822. You have AT&T, now you have WBD. WBD is your new discovery. Your DISCA now is WBD. So
it'll be nice when they and I'm not talking fundamentally here, Dennis. I'm talking technically. And Mitch and I were talking about this on Friday. I mean, they got to obviously adjust the charts and everything, but from a technical standpoint, it did look like it had a little bit of a breakout or tried to break out on Friday, right? So now now it being up 60 cents, it'd be, I don't know, way up here or something. So technically maybe it had a breakout, but
yeah, I actually, my chart is adjusted already. My system's adjusted.
Oh, really?
I can see mine's adjusted, and I can see the breakout you're talking about there. It doesn't look terrible.
Where's the next resistance?
19. Then 20, then 21.
Every dollar.
No, 19, 1910, 1920, 1930, all the way up.
All the way up. All the way up. Buck pressure all the way up.
That's nice. What is that? NeoVest already did the adjustment?
Yeah, NeoVest got adjusted.
Nice. Wow. Hats off to NeoVest.
All right, we do have a deal to announce this morning, or a deal that's been announced this morning. SailPoint, SAIL. Has been acquired by Thoma Bravo, private equity firm, for $65.25 per share in cash. So SAIL going off the board. Cybersecurity M&A. This has got to be the second or third one this year. Second or third big deal this year.
This was rumored. This was rumored for sure. I can remember. I'm pretty sure this check the pro. I remember hearing about this being a target. I thought, and I don't see it in the chart though. That's what's making me sketchy. I thought this was rumored.
Hold on, let me go back in the pro. Well, we have
go back to November of 2021 when you see this huge pop in November of 2021. I got pretty good. I have goldfish memory on a lot of things.
There it is. Wow.
Like I think so.
He is right here. He's 100% correct here.
I think so.
Well, no, that was also earnings.
Was it earnings?
Yeah, November 9th, 10th.
I'm just looking at the big pop. I remember. Is anybody on me in the chat? I thought I remember seeing that this was rumored. Like, not that there was going to be Thomas Bravo, but that somebody they had said something about looking at, maybe I'm making it up.
I don't know what it was rumored, but someone got a really good feeling back here. Back in March when it was trading 40, 41. But that's when the rally started. But they look like this deal's going through. I mean, it doesn't look like regulatory scrutiny, right? You said $65.
Private equity deal, so there's no
private. Don't have to worry about it then. Yeah. 65, and I don't know if anyone else is going to come in. It doesn't look like anyone's going to come in any better.
Thoma Bravo, by the way, this has got to be the third
They
deal.
buy stuff, man.
Okay, so they bought Anaplan, right? Last week. No, I'm sorry. They bought Anaplan 2-3 weeks ago. They bought. Apparently they approached Zendesk and was rejected. Who else did they buy this year? They bought ePay but that was in December. They've been buying it. They've been making some moves. They've been making some moves this
You
year.
want to talk about who's bullish out there? They buying stuff, man.
Private equity, yeah.
Yeah, the private PE still bullish.
Yeah.
Everybody's saying everybody's bearish. No, not Tom's Bravo.
Yeah, it was pretty. That's a lot of activity here. All right, let's get to the airlines after Tim Quast. So it is Mondays. You know what that means? It's time for Market Structure Mondays with Tim Quast here. Tim, good morning.
Good morning. Nice to see you.
How we doing today?
Well, we're reveling in Denver because the Denver Pioneers are once again, for the 9th time, the collegiate hockey champions, and having once again beat people from Minnesota, which I tell you that makes us feel pretty good.
Okay, congratulations to the.
Well, thank you.
Congrats to the Denver Pioneers. So, Tim, we got a question on Twitter over the weekend. We already sort of addressed it, but I'd be curious to get your take. Obviously, a short week this week. Markets close on Friday. Options expiration on Thursday. What are your thoughts regarding that?
Well, and there are a series of expirations. That's important to understand. That they take place effectively Wednesday, Thursday. Then you have new options trading next Monday. We always call the Tuesday following the trading of the new series Counterparty Tuesday, because banks will square their books related to the things that expired and the things that began trading. Pardon me. Then you've got all the volatility as an asset class expirations on Wednesday. So all of that is going on with a holiday. And so those periods tend to be more volatile. They do. There's a greater opportunity for traders to speculate on supply-demand imbalances in those instruments. Now, can I tell you that that's absolutely going to occur? No, but I think if you're a trader, you should go in clear-eyed and understand that those things are occurring. If you're walking into a river, it would be nice to know that you're about to step in some kind of deep hole and go in over your head right before you do it. So that's kind of the thinking here. And I can't tell you absolutely what will happen. I can tell you this, that between March 14, which is the last options expirations period, that's when it began, SPY was at 417, give or take. So proxy for the S&P 500, and it closed Friday at, call it all the same as 447. And we've had, over the last 20 trading days, 14 of them were up days. That is where there was more buying than selling if you measure how things close relative to midpoint. So we've actually had a very strong stretch here from March to expirations to April, and people forget that. You look at the market and you think, whoa, it's really struggling. Well, it had a very good run. Well, that may mean that it has a difficult time repeating that. I'm not saying that that's going to happen, but broad demand is falling. You look across the market, there's weakness in demand. Investment behavior was down 4% last week. Derivatives demand is flat. So again, I'm not saying that the market is going to take a tumble here. To me, the bigger risk is next week, Monday, Tuesday, when the new series trades. But that's how I think about each of these periods. I always like to look at what's been occurring. Is investment behavior increasing or decreasing into these events? And to beware that as a trader, it's a very challenging period. You can get caught out in these stretches. Dennis, you may have additional thoughts on that.
You said it perfectly. I mean, this is, you've got to be careful in this environment. And the one thing I keep saying is if you're chasing moves in this environment, you're losing money. Because this is, like you think about all the big headlines from last week, and you obviously look at Twitter and, blasting off on the Elon Musk when we were talking last Monday about this. Well, now it's come, and ran for 2 days up to almost $55. Now it's turned around, it's $44, and it looks like it's giving it all back. And then, go 2 days ago, and the big headline: Warren Buffett, Hewlett Packard, 41. They're all pump. CNBC, they're talking nonstop about Warren Buffett and Hewlett Packard, and now the leakage is starting. It just seems like when we get these big gains, the leakage follows. There's no follow through. It's like there's no follow through in this market, at least for the bulls.
And Joel, you pointed out this in market structure for Twitter last week. You looked at it and said, "Oh, look at the supply side; it's way up. So unless something changes, Twitter is going to go down." Well, you were correct. If demand hits a ceiling and supply increases, it doesn't matter who just bought $3 billion worth of it. The price is going to go down.
That's fair.
It's a tough environment. So how do we identify a turn? And this is what everybody keeps asking, is this the bottom? Right. Is this the bottom? Is this the turn? I mean, it's a dangerous, tough strategy there, but is there some secret sauce for us to look at to identify when there is a potential turn in sentiment here? Or is it just buying market structure edge?
Well, I always look at two things. So let me share my screen here, and the first and biggest to me is broad sentiment, that you always want to be aware of the overall demand in the equity market. And you could pick a proxy, and there are different ways to do this. You could look at fund flows. There are a variety of things that one can do. I prefer, because I'm biased, toward our own technology, we like to measure the waxing and waning of supply and demand. And it will tell you before the market goes down. Demand has to first stall and begin to fall before stocks begin to weaken. It's a basic principle in economics. It gets to a monetary policy point. One of the problems today, when the central banks constantly jack with the value of currencies, is it's very difficult for businesses and consumers to understand supply-demand balances. And then we get caught out with, you can't get a Bosch dishwasher for a year. I know, because we're in the market for one, and you can't get one. Those supply-demand imbalances vanish behind currency policy. Well, fortunately, in the stock market, no central bank yet has been able to jack with it and screw that up. So we can see this. Here's broad demand. And first of all, the first thing I do is look at the short term. I just want to know over the last, this is 90 trading days, I think. And I want to know what happens at the short-term peaks. Here's a peak, market went down. Green part is demand. Purple part is the price of SPY. Demand peaked, prices went down. Demand peaked, prices went down. Demand peaked, prices are going down. The only reason they haven't fallen harder is because supply is below trend here. But look at the trend line. These are not great conditions. I would look at this and say, well, it could turn around, but the bias in this data is not to the upside, it's to the downside. And then behind the scenes, I like to go look at the broader data. And this is really sort of like inscrutable. I realize that, so I'm only going to show you one thing in here. This is data all the way back to 2012.
Whoa.
And it's looking at the 90-day rolling average of demand relative to SPY. And all you have to know is that every time it sags, there is a drop in the market. And the fact that these converge, SPY and demand.
Wait, Tim, can you, whatever this screen is, can you stop sharing that and go back to where you were before? Because your audio, as soon as you brought that screen up, your audio just kind of conked down on us a little bit.
Died. How's that?
Oh, weird. Here, I'm just going to take your screen off. I think your audio is doing some weird things. They're very bizarre. Now it's better.
All right. Is it better?
It was like the records when you put the records on the wrong speed. Like when you put the LPs on the right?
Yeah, that's what it was. That's what it sounded like. That's weird. Anyway, you sound good now. So
maybe we could play it backwards.
Just describe describe to us what that chart said without having it up on the screen.
So the core takeaway is that if the rolling read on demand weakens, that the market has always gone down, and that's where we are. So to simplify this, the first thing I do is look at broad sentiment and a shorter period because it's a short-term market, and for this purpose, I'm a shorter-term trader.
Right.
And then number two, I want to know what the propensities are historically when similar conditions exist. And there's no question that these are not great data. Once again, something could change the outcome, but that's how I think about it. So then what do you do in those circumstances? Well, you want to always bias your trading toward things with a propensity to rise as opposed to fall. And that's not that hard. You can see where the money is going. So I pointed out Dominion last time. The utilities have done well,
Right.
certain energy stocks have done well, and I want to show you how to rotate from one thing to another. So here's Dominion. So, pardon me, if you pollens are out here in Denver, it was 77 degrees on Saturday. So here's the price of Dominion and the demand and the supply. Now I look at this and say, all right, well, that may have run its course. Is there something else that I could rotate to? Well, yeah. So just pick another one where the money is. Let's take Ameren, St. Louis company, and there's a better supply-demand balance. So all I have to do is sell Dominion and put my money to work in Ameren with very strong demand and falling supply because it's more likely to give me a return. Those are the kind of things that you can do in any market. Just go where the money is, but don't go try to buy NVIDIA or the FANGs or things like that when broad sentiment is falling, because remember, tech is half the market. If you add up tech, consumer discretionary, communication services, that's how I think about it.
Awesome. So my biggest takeaway here is you're mostly just focused on the start of next week once we get this new option cycle, and then it's all sort of up in the air until then. But that's you is really where the opportunity may be, or that will tell us more than this week will.
If the market is down this week, it's because there's weak demand for derivatives and investment behavior has declined. If it does fine, it's because people bought 5-day out of the money calls back on Thursday, which was a pretty good day, and they're chasing prices up into expirations. Either way, you can get caught, people. Just realize that no matter what you hear on the headlines from CNBC or elsewhere, no offense to our friends at CNBC, that the market will not reflect macroeconomics, interest rates, blah, blah, blah. It will reflect short-term speculation on expiring and renewed derivatives. That's what's going to drive the market the next week. Yep.
Tim Quast runs Market Structure Edge. There is a link to sign up for that in the description of this video. Also put it up on the screen right now. There it is. Tim, always a pleasure.
Tim, no SAT words today.
I thought about adding prodromal to it because that's the development of a medical condition between its first initiation and when it becomes a full-blown rash. And that's kind of a pretty good description of the market.
If we were in the spelling bee, it'd be like origin. And then they'd be on the back of the card.
That's right.
Like doing that.
Hey, I should say, guys, I am out next week, because I'm headed back to the Cerulean Sea. There's another vocabulary word for you. We're off to stay.
Where is the Cerulean Sea?
I'm Googling it.
Where is this?
Cerulean is a word that means blue-green, right? So it's the Caribbean. So we're headed to St. Martin, St. Bart's, and Anguilla. And so we're leaving Wednesday, and we'll be back the 23rd, I think the 23rd. So I will miss you next month.
Oh, we want you to do it from the boat.
Cerulean, like CER.
Can't you do it from the cruise?
Your
cabin.
CERULEAN. I wish we could. It's unpredictable. If we could.
It would be awesome. We want to see you on the cruise.
Right. If it's possible, I'll drop a note. If it's possible, we'll do it because that would be good.
We live vicariously through you, Tim. We really do.
Would you leave Tim alone?
Tim, I don't get out, Joel. I don't even leave the house. I get snow outside right now. I gotta live vicariously through this guy. So this is important to me.
Dennis, why
I haven't went anywhere in 2 years.
Dennis, why aren't you in the metaverse? Why don't go get your Oculus goggles?
I would actually be a good candidate for the metaverse.
There you go.
It's true, actually. I should go. Maybe I should, and then I'll turn bullish on all these metaverse stocks.
All right. Well, Tim, we'll catch you in a couple weeks. Enjoy the Cerulean Sea.
Thank you.
We'll see you.
See you on the other side.
All right.
Okay. Thanks, guys.
All right. There's a few more things we have to discuss before we do ticker time. One of them is the airlines this morning. JetBlue and Alaska Air both cutting their capacity through the summer due to labor shortages, as they say.
Oh man, this is
JetBlue is coming off of a weekend in which they had to cancel 300 flights, so they're lowering capacity 8 to 10% through August. Just not enough workers, not enough pilots and flight attendants to go around, apparently. So, I mean, that's how it's going to be. I wouldn't be surprised to see more of these headlines. PSA, we do have earnings from Delta Airlines on Wednesday. Let me check.
Yeah, it's one of the big ones. It's Wednesday.
You know what?
Yeah,
If
Wednesday
you're
morning.
gonna an airlines, and I don't take a lot from Barron's, but
Oh yeah, I saw that
yeah,
too.
they own an oil refinery, man.
Yeah,
They
Delta.
yeah, yeah. Yep. So there, who cares about people flying, man? They're probably pumping right now, baby. When it was over 100 a barrel, they're like they had all the stewardesses and the pilots working in the oil refinery just to get that stuff out there. Is what they tried to do, but
Yeah.
it's held up a little bit better. What's going on with this whole saga, with the save saga? What, they're buying it at 35 and 32, and it won't trade over 28? I don't understand that.
Wow, there'd be
I don't
so much
Regulatory.
antitrust scrutiny on this deal, and we talked about it. I don't think it'd stand a chance, but
Okay.
maybe
Either does
not.
the street. Either does the street.
No, that's why you're seeing a 26 with a potential 32 or whatever on the table, and it's just, and obviously hasn't been accepted. It's just all talk still here, and they got the deal going with Frontier. I don't know. I can't see that being allowed. But JetBlue has been absolutely punished for this. I mean, obviously, it's been hit a lot harder than all the other airlines. They hit it on the rumors that they were going to buy them. So does it get a relief pop if they go out? Probably. Like if they say, okay, now we're out
Yeah,
of the
we're
deal,
out,
we're not
yep.
going to buy them. Then you'll probably see that quick, a 7, 8, 10% pop in JetBlue, and that could happen. But again, is the airlines where I want to put my capital right now? I mean, I know I'm sounding like a broken record here, and obviously sounds like I'm bearish everything, which to a certain extent has been the truth. I mean, it's just a tough market to come in here and say, yeah, okay, airlines, that's where I want to put my money. Because when you start thinking about it, if we're, and I'm of the opinion they're not going to be able to have a soft landing, I'll throw that pun in there, with the Fed. I mean, we enter a recession here while you're cutting out your trips. And then I don't know. You got the reopening possibilities there, but it's already kind of happened. People are doing what they're
I
doing.
know.
The reopening trade isn't in the future. It's like happened. So that's not a catalyst either. I just don't see. And then I guess when fuel prices start to come down, inevitably they will. That's going to help the airlines, but tough
I
business.
think the war. I mean, the reopening trade was kind of set up, and that you could it was turning, and then the war broke out, and I think that I don't know if everyone was planning on traveling, going to to the Ukraine or to Europe, but I think that that put a crimp in the reopening trade. And also, I just want to make one comment, as far as like when Dennis and he's talking and his bearishness or whatever. This, it's fundamentally, but it's also reading the tape and what he sees out there. And no one in the chat or anywhere spends as much time seeing the bids and the offers and the reactions and the overreactions. So it's mostly fundamental to base. You do your work, but it's also just sit in front of that screen and seeing the price action and
It's
stuff.
all
So
screen time.
yeah,
I mean, that's like when I go on a vacation, I take 5 days off. It takes me 3 or 4 days to get my feel back. But I haven't had a vacation in so long. Like, I haven't missed a day of trading. It's been a long time. I mean, you guys would know on the show, but it's been a long time.
when you went to Canada, I mean, you went into
Well,
Windsor or
yeah,
leaving.
Yeah, for a day I missed there
Well,
back in November. So, going back 4 or 5 months where I
well,
took one day off, but missing
you
a
went
week, I
It does.
haven't missed a week in a long
you
time.
went camping in like I don't know when that
Oh
was.
yeah, then last summer.
It was was that last summer already?
Yeah, that was last
Holy
summer.
cow!
That was last July. So you
Wow.
go back, it's a year
Wow.
ago. That was the last time I took a week off.
Wow.
So, and no, that's what you do. But I mean, it gives you a feel, right? You leave the markets, and then you don't have that feel. So it's a
Yeah.
tricky market to even get feel for, though. All the feel is just chop. I just feel chop. It's been chop. 2022 is the year of chop. That's how we keep trading it.
Let's go to the chat here. We have some time for ticker time here. Someone asked us about Roblox below 40. Joel.
Oh,
Before you jump into Roblox, just
Yeah.
want to tell the chat, do us a favor, guys. Over 1,600 people here
How many likes?
and only 200 and something likes. Come on, guys.
I
Do
know.
you guys want us to
I
go
didn't
behind
even
a
like the
paywall?
show here. I just liked it.
Come
Joel
on.
liked the show for once. He's never
Support
liked the
us
show before.
as we give you guys information in the morning and get you ready for the market. Hit the like. Smash it up. Come on.
maybe we're just not likable.
Well, Joel, you haven't. I just liked the show. I liked it. Right
Okay, I
like it.
All right.
We liked the show.
like it. Okay, 370. That was me. Oh, 444.
Joel liked the show for
Look at
once.
that! I created a breakout.
Joel
Yeah,
just touched
yes.
the like button and
Look
it
at that!
exploded
Did you
the
see
likes.
that? I'm going 500 bid right now. Come on
500.
now.
500 just went. 500 just traded. Joel. Go
515.
600.
I'm
bet.
at 550.
It's a breakout.
I'm at
525.
550. I'm 549.99 for
You're
the
selling?
whatever I bought at 500. Yeah.
Oh, you're selling the 500. You're selling 549. Let's see if you
Yeah.
can take 548. You just got pennied. Said it. I'll jump in front of you on the like button.
555. I'm gonna lock it down at
Broke out
550 now.
556. There we go.
That's
All
what
right.
we used to do in the Bright office all day with the S&Ps.
Bet
But
on everything.
All right.
Side
Roblox.
bets on everything.
Roblox here, quickly.
oh, Spencer brings us back to the task in hand.
Oh yeah.
I mean, if you want to
That's still stock. Sorry.
let me see the pre. I hope Bill got out of this one. Bill
Santiago in this?
Yeah, we gotta dig him up. We haven't talked to him in a while. You hit 42. I'm not seeing anything at 42. Next daily level comes in at 40.01. And maybe if you want to do that and lean on the low of the move at 36. But this was a good line. I wish you guys would have this line. I should have put the date on there. Boy, you hit the resistance. I don't know.
Wow,
Man.
good line.
Yeah,
Joel.
I don't know. I don't know. Lean
You
on the
can't
low
do
of
that
the
until
move.
it's above that line, really. I mean, seriously, why this is weak, breaking down, doesn't make money, metaverse.
Stay at home.
It's got everything you don't want in it, really. I mean, the growth is there. Eventually, it will find some love, but valuation on these things, I think you got to get the momentum going on your side. I like your line, Joel. Everybody text me or message me on Twitter when it gets above that blue line. Next.
I'll move it down soon. I'll be moving it down soon.
It's not that far away.
52. 52.
Yeah. All right. Okay.
I didn't even here.
right.
No, I want everyone to alert Dennis and text him when it gets back. I got a new level because double
level?
top. Yeah, 48. There's a double top at 48. It looks like.
Got to get above there.
Yep. Okay.
All right. Fun time.
Next.
T. Riley mentioned NetEase, NTES. There is a headline this morning. Well, there's actually a lot of headlines this morning coming out of China. The one that pertains to NetEase, though, remember there was the headline.
Wow.
What was it? 6 months ago now, that the government was going to regulate how how often kids would be allowed to play video games, and they stopped issuing new. They basically or they dropped the hammer on the gaming industry. So there's another headline out this morning saying that they have finally issued new approvals for games after a 9-month suspension. So NetEase and Bilibili are both trading higher because of that this morning. These are your two largest Chinese video game stocks. So that's why they're higher. Though really we should talk about this within context of all of China, because it is a freaking mess right now. What is happening over there? It is utterly insane. NetEase is up because it's good news for their business, but I mean, what is happening over in China and Shanghai is nothing short of madness right now.
Just locking the whole country down for 28,000 cases. I tweeted on the weekend. I live in a county of 400,000 people. In Ontario right now, they're estimating that 1 in 20 people currently have COVID. Not joking. It is everywhere. Cousins have it. Brother-in-laws have it. Parents' best friends have it. I mean, it is just around everywhere. I had the scare with it. I'm still not sure if we had it or not. My boy tested positive. Then he tested negative twice. So I have no idea what that means. My buddy just came back from Cuba. All 4 of them got it in Cuba. They just came back to Ontario, just tested all 4 of them.
Crazy.
Husband, wife, both kids, both get it too. Everybody I know has this thing. It's everywhere. It's, they look in the in the wastewater, and it's at record levels of, in the wastewater in Ontario. And it's not just Ontario, it's everywhere. COVID is just like flying through the air right now. And you want to sign, and you want to literally shut a whole, the whole country down for 28,000 cases. I live in a county of 400,000 people. I guarantee you there's probably more than 28,000 cases in just this county.
Madness.
It's insane to handle it like this, unless it's a completely different thing, or unless they know something that we don't know. I cannot understand why we're even worrying about this. Like why they're shutting countries down for this anymore.
I mean, Shanghai is one of the largest cities in the world. I mean,
there's 26 million people and there are 28,000 cases. I'm in a county of 400,000 people. I bet there's 28,000 cases in this county right now. Yeah, you can't get rid of it. Richard's judge is right. COVID is here to stay. It's going to be here forever. At first, we thought 2 years ago that maybe we could figure it out. The vaccines obviously have helped to a certain extent with the symptoms, but to eliminate this, it's like we'll be chasing this for the rest of our lives. It's like the flu. It's going to keep changing. It's going to be complete variations. If we continue to just hide out, and not do anything, which I was doing for a long time, and I've thrown in the towel on that because you can't hide forever. We're 2 years into this, man. We're 2 years into this. There's bigger things to worry about now. And, obviously there's going to be some people that get it worse than other people. But for a lot of people, it's just been a bad cold or a bad flu.
So anyway, if you're trading these stocks this morning, keep your head on a swivel because they're all China's down because of this very.
All right, guys. I'm gonna hop. Let you finish up. Great job today, Triple D. Go get them.
What a positive note to end the show on. We are going to wrap it up though because we have to head on over to live trading with Benzinga. There's something else I just wanted to say. Oh yeah, watch out for some Fed speak. We're going to get some more Fed speak at 9:30 Eastern time today. So just keep your eyes open for that. We do have some earnings to discuss. We'll talk about that tomorrow because the earnings are going to pick up again on Wednesday. But if you haven't already, do us a quick favor. Hit that thumbs up button wherever you're watching this show, whether it's on YouTube, whether you're watching us on Facebook, or like us on Twitter. If you're watching us on Twitch, hitting the like really does help. It sounds dumb, but it really does help. That's why we ask you to do it. See you later, Dennis. Thanks to our guest, Tim Quast. Thanks to all of you for watching. Thanks to everyone in our chat. And please remember, as always, that all the information from today's show is meant to be used as informational purposes, not for investing or trading advice. We are just over a week away from the next Benzinga conference, the Cannabis Capital Conference. The link to buy a ticket is in the description, complete with a discount code. So check that out. Also, we're like a month away now from the FinTwit Conference in Vegas that Benzinga is co-sponsoring. Link and discount code for that also in the description. I'll even bring it up on the screen for you. There it is right there. But again, the link to that is in the description of this video. That's a wrap. Live trading with Benzinga going live in a couple minutes here. Mitch, Ryan, Zunaid doing their thing through the open, telling you what's on their watch list, taking questions from the chat, looking at your stocks, looking at their stocks, trading through the open and beyond. So head on over there. The stream will end and redirect to those guys. Everyone, good luck at the open today, and let's make some money.